everybody, to another SF Live episode this Thursday. It's episode 184, and I'm joined by Will Thomson here in a few short seconds. He's founder and managing partner at Massif Capital, and we're going to talk about green energy revolution, how that's impacting your investments, and what he's investing in with his fund, and what we should be looking out to and forward to in the coming years. And just off mic, we talked about the F-150 Lightning, so how that's been revealed yesterday and the impact it's going to have on the market. So curious to see get his thoughts on record here as well. But before we switch over to our guest, please be reminded this is an interactive format. So if you have any questions for our guest, make sure to use the hashtag function on Twitter, hashtag AskWill, or use the YouTube chat. We'll be able to see that as well. Make sure to get those in while we are having our conversation live with our guests. Also be reminded, of course, to follow us on YouTube, follow us on Twitter. Don't forget to turn on that bell notification. We do all our interviews live. That way you do have a chance to follow us and get ahead of the curve as well. Maybe pick up some of the top stock picks ahead of everybody else and to find a gem there that way as well. And to be reminded, we are hosting Deutsche Goldmesse this coming Monday and Tuesday on virtually, unfortunately, but it's free to sign up, of course. We've got 10 fantastic keynote speakers, 28 companies. You can see on the screen, we got Ross Beatty, Keith Newmeyer, Lee Courier, Josh Crum, who used to be an advisor or still is an advisor to Jeff Curry at Goldman Sachs. He recently advised him on Bitcoin investments. So really curious to hear from him as well and what he's been advising them lately and what his position on gold obviously is. And it's free to register. The description is in the YouTube below, or the link to the registration page is in the YouTube description below. So make sure to use that to your advantage as well. Now, without further ado, I said enough. Let me switch over to my guest, Will Thomson. And Will, I appreciate you joining us. I'm looking forward to an interesting discussion.
Well, thanks for having me.
Yeah, no worries. No worries. First time guest on the show, and you know, the shtick is, and what we've been doing with all first-time guests, you have to introduce yourself. And who's Will Thomson, and what does Massif Capital do?
Okay. Well, I founded Massif Capital in 2016. It's a long-short equity fund, global remit, mostly focus on, or entirely focus on energy, basic materials, and heavy industry. Primarily are sort of thinking about and investing in the transition to a low carbon economy, but also real assets, just sort of more broadly and in general. It was an opportunity that I sort of saw in sort of, let's call it the 2012 to 2016 period, when I was working for Lloyd's of London insurance syndicate, and I was working with a lot of commodity traders, a lot of project finance for banks. And even at that point, you know, there was not only a lack of attention being paid to those sort of industries and spaces outside of a couple of individual sectors like fracking, but you already sort of started to see that regardless of what you think of sort of climate change and energy transition, the concern with environmental footprints and sort of the negative externalities from these economically essential industries was starting to be a variable. And so there was looked like an opportunity to me to do some really thorough research and explore those spaces and invest in them on behalf of mostly high net worth and family offices.
What is your background, Will, if I may ask?
Yeah, so I have a background in finance and a background in political risk. I have a master's in government from Harvard, where I sort of focused on the way political risk impacts natural resources projects in emerging markets. And I worked overseas for the Department of Defense for a little while. And again, as I said, Lloyd's of London, some investment banking and private equity. So a mixture of things.
Interesting. Yeah, that Master of Government piqued my interest as well, because we were going to talk climate revolution, of course, green energy revolution in the US, which is dominating headlines these days. So wondering how that factors in. Like, how does your degree actually help you figure out like how real and how legit politicians are these days about what they've been announcing?
Yeah, well, I think, you know, as we actually released a sort of a blog post today, sort of looking at what the Biden administration is proposing or what they've said versus what they've actually done. And, you know, look, Joe Biden's got a lot on his plate with a pandemic and whatnot to deal with. So the fact that they haven't done a lot in the energy transition yet, and mostly just, you know, sort of talked, I don't think we should hold that against him yet. But I think overseas, you know, you're seeing a lot of meaningful efforts, especially in Europe. In the United States, I think we're still It's mostly talk. I think that that's going to change, but I don't think it's going to change nearly as dramatically as people think. It just, from the perspective of what can be accomplished in our political system with the way it's currently structured, with the different players, it's just really hard to foresee the ability to actually pass any meaningful legislation that has sort of regulatory impact on the industries in what we call the real asset ecosystem. So I think regulation out of Europe is quite meaningful, and it's going to impact multinationals the world over, though.
Before we dive deeper in the macro part, I just want to quickly follow up on a bit of the history of Massive Capital. You said you founded it in
Yeah.
2016, and I'm wondering, like, if that was
Yes.
around the time, like, we've seen a lot of, let's call it a bit of a battery metals boom that quickly faded away again. Though, like, is that what
Yeah.
attracted you? Like, and is that why you stuck to it? Like, give us a bit more color there.
No. So, I mean, at the time, and we sort of mentioned lithium before. At the time, I looked at it and I said too early, and sort of avoided or sidestepped a lot of that battery metals transition discussion. And I think that's borne out, right? It especially the transition to EVs is very much a consumer driven transition. So it's going to be slow. It's going to take a lot of time. It's going to be a lot slower than anyone sitting behind a computer with an Excel spreadsheet trying to sort of calculate what the transition looks like is going to take. So it wasn't what initially attracted me. I was more attracted just to the space of natural resources and heavy industry in general, because people weren't paying attention to it, and yet they remain critical industries. I mean, as we say on our website, the internet's great, right? And Facebook's wonderful, and Twitter is interesting, and all these things are fascinating and sort of advancing our society in different ways. But they don't occur without cement. They don't occur without steel, copper. Fiber optic cable is pulled glass, right? I mean, that's a commodity too. And, these are the foundation of society, these businesses. And they haven't been disrupted in, 100 or so years, oftentimes. And we think that a lot of disruption is coming down the pipeline, both in how they operate, due to environmental issues, but the significance and importance of them in terms of sort of a revamp of a lot of the infrastructure that exists in the developed world and the build out of it in the developing world.
And good point, actually. I was going to ask you, like, it feels like the last 12 months, the green energy discussion has been heating up. It's been sort of swept under a rug, it felt like, for the last, as you said, from 2016, I felt like, at least because me watching the juniors, it felt like it was dipping interest, and now it's coming back with the, new U.S. president. But what are some of the key drivers behind that now? Like, what has brought that to the forefront? It can't just be the green energy initiative out of the U.S.
No, and I think that with the election of Biden and earlier this year, you saw sort of what sentiment could do in terms of boosting some of the names in we'll call it the clean energy space overall. You saw a lot of things rally, everything from lithium, and we're invested in Lithium Americas. So everything from Lithium Americas, which doesn't even have a mine operating yet, almost, more than doubling over the last year. To cobalt and all that stuff being popular, but I think that was mostly sentiment driven. I think changes on the ground in Europe and Asia, especially some of the regulatory changes encouraging the purchase of electric vehicles, or the phase out of coal in Germany, the phase out of nuclear, which is sort of progressing the uptake of renewables. I think all those things are having a significant fundamental sort of driving factor behind the transition for a lot of these businesses. The US-based businesses, I think, have moved less than a lot of other sort of international businesses on a fundamental basis. I think there are some pockets in the United States, specifically some of the solar companies, which have benefited greatly, and there's been a lot of uptake. But that's very geographically sort of centered on California and a couple of places where there is regulatory incentives. I think demand is growing for a lot of the metals, especially those related to EVs. But I would still caution everyone that the transition to electric vehicles is going to be slow, much slower than people think.
Yeah.
At least in my opinion.
Good point. And you mentioned like consumer-driven changes, of course. Like, what does the consumer want right now? Like, what are we looking at? We see all the car makers pretty much saying, okay, we're going to go all electric in some point in the future. But is that something that the consumer actually wants? Is like, what does the consumer want right now?
Yeah, I mean, I think that's uncertain, and it also there's a wide spread of answers that I think uh, make it challenging to foresee the transition on the part of the car companies as straightforward as they're making it out to be. I also just it's not clear that the supply chain is really set up for the transitions that some of these car companies are proposing. I don't remember how many gigafactories Volkswagen said they were going to be building on their they didn't call it battery day, but they had, I guess, a power day, they called it, so as not to rip off Tesla too much. And, the gigafactories that they were proposing to build in Europe would have consumed, I don't know, it was like 40% of the globe's lithium supply last year. We're just not set up for that. You can't build mines that quickly. And we've got plenty. The challenge from the investor's perspective is we've got plenty of lithium. There isn't a lithium shortage. There's a lack of mines for lithium, which is a little different, right? It's not like nickel where we struggle to find a good deposit to mine. Lithium's out there. And so the different metals are going to experience some very different sort of life cycles over the coming decade, I think.
Did you see any other, like, car companies have been dominating the news, obviously. The F-150 Lightning, I mentioned that in the intro, was a big reveal yesterday, quite eye-opening and interesting to see. Do you think, are there any other drivers? I think storage, wall power, and wall energy storage is one topic I've been hearing a lot about lately. Do you see any other products that might be moving into the consumer's, like, focus of attention?
We haven't really seen anything else, and that's part of the reason why we're a little cautious. There's the transition to a low carbon footprint at this point is really renewables and electric vehicles, and we haven't even started to scratch the surface on anything else. And those two sources or drivers admittedly require a lot of metals. And that's going to be the driver for metals. But outside of that, you have a lot of other transition drivers depending on your industry. So cement or steel or chemicals. These businesses are going to have to revamp and change the way they do their business, and whether that's carbon capture or whether that's finding different feedstocks other than petroleum for the chemical industry, that's going to impact all kinds of different commodities and different businesses and different business models. And so while we are particularly excited about the opportunity in a lot of industrial metals, copper, nickel, lithium, et cetera, the opportunities outside of those spaces are significant. So, who is going to be the cement manufacturer that figures out how to produce cement in the absence of significant emissions? The cement industry produces 7% of global emissions. Is it going to be someone who utilizes carbon capture? If so, where is that carbon capture plant and equipment produced? Who's making it? Those are a lot of the interesting opportunities. Offshore wind, admittedly, very interesting. Batteries, very interesting. But what about the wires that connect the offshore wind to the onshore? Copper wires, okay, but who's manufacturing the wires? What is their business going to look like, and how is it going to grow? There are a lot of opportunities throughout the supply chain, and they start with the commodities, admittedly, but over time, there's going to be cycles. And at different points in that cycle, you're going to want to be invested in either the commodity or someone who's consuming the commodity to produce some product. And that's going to sort of go back and forth, I think, over the next 10 years.
Those are some interesting comments. I don't think we ever had anybody on the program talking about cement, for example. It's not even a mainstream media topic, right? Despite it producing 7% of global CO2 output, right?
Well, and I mean, you've got steel, which is the same thing. Chemicals, I don't remember what the stat is with chemicals, but overall, the chemical industry is even bigger than the cement industry in terms of emissions. And there you've got challenges where, petroleum is the feedstock, heat is the generator of the process. So it's hard to electrify. It's hard to get different feedstock. You've got all these challenges, and everyone's looking at it and saying, how can I change my business model? How can I continue to do this regardless of the regulatory environment, regardless of, say, a price on carbon in Europe or a carbon adjustment tax coming out of Europe if you're in the United States? How do I change what I'm doing such that I can decrease the
Okay.
emissions?
How is your fund playing the current scenario? Like, how are you positioned? Like, tell us a bit more about the composition of the fund.
Yeah, so at the moment, going sort of back to that idea that there's going to be a sort of a flow in and out of where you want to be in the supply chain, we do think the companies that we refer to as enablers of the transition, copper miners, lithium, Vestas wind turbines, at the moment, we think enablers of the transition is the way to sort of play it. And these companies or businesses like the chemical or cement industry that need to transition and need to invest in R&D and science in order to do that, they are companies to be looking at, studying, and doing research on at the moment. But we have about 50% of the portfolio invested in materials, specifically mining. 25% or so is invested in energy, and that's mostly utilities, one in Europe, one in the United States, both of which are transitioning from a coal-heavy footprint to a renewables-heavy footprint. And then we have got a couple of niche metals here and there, and a couple of industrial companies, and some precious metals.
Okay. You mentioned niche metals. I was going to go somewhere else, but then you mentioned niche metals. Now I want to know what niche metals are you looking at?
Well, we've got tin.
Okay. Yeah.
At the moment, I guess is our only niche metal. Although perhaps uranium is a niche metal. I mean, it depends on how you want to look at it. But we've got investment in a company called Alphamin. And what we like about Alphamin is, there's a tin supply crunch. And tin is used in anything and everything with electronics. You flip over the motherboard of your computer and all those little dots holding the chips on, that's all tin. When you're connecting wires, there's tin. Tin is also used as an alloying metal in a lot of rare earth magnets. And there's just not a lot of places to go for tin. There are not a lot of tin mines. And one of the things we're constantly thinking about these days is where are the flows of capital going to come from and go to when investing? When we look at sort of a market that has increasing passive participation or increasing retirement flows, things of that nature, we need to think about where the sort of next marginal buyer is going to be. And tin is interesting because you got a supply crunch, and there's really only one publicly traded operating mine, and that's Alphamin, which has the highest grade tin mine in the world. And other than that, you can sort of invest some money in juniors, and you don't have any other opportunities. Now, we size the position small because maybe tin never attracts a lot of attention, and so maybe it doesn't get the flows. But if it does attract attention, and the commodity certainly has, it's up 150% or something over the last year. The money's going to flow to Alphamin. So we think it's an interesting opportunity.
Tin almost answers my next question. Is there a metal that we don't have on our radar screens that we should be looking out for? And tin sort of fits the bill. I spoke with somebody yesterday about iridium, which I didn't know much about, for example, because it's needed in hydrogen. Production of hydrogen fuel, because you can separate the water and the oxygen and stuff. So is there any other metal or anything that you have on your radar screen besides obviously copper, nickel, and all those good things?
Yeah, not at the moment. What I would say about niche metals is they're particularly difficult to invest in well. So it's just sort of tread carefully, understand really what you think the drivers of your thesis are, and the thing I would say to look out for most is investing capital into a company that may have a spectacular year due to some niche metal taking off. But again, if it doesn't attract enough attention to move the stock and to drive flows into it, it may not matter. So that's one of the difficulties with niche metals, is that sometimes they just don't attract the attention, even if the company does very well. Maybe the market's too small to attract institutional investors, things of that nature. So one just needs to be very careful about the niche metals and how and when one invests in them.
Before we talk about your top stock picks / top holdings, we got a question here on YouTube, which is actually interesting because it leads to a broader discussion as well. And the question is, Alex is asking on YouTube is, I was wondering, Mr. Thompson had any comments or thoughts on Robert Friedland's SPAC Ivanhoe Capital Acquisition Corp. And it has a mandate to invest in green battery technology. And then maybe to expand that question, that's what I mean by, okay, it's a more expansive one. Like, do you see more investment dollars flowing into the sector like that?
Yeah. So I haven't looked at Friedland SPAC, so I can't really comment on that. I would say, we've looked at SPACs and the vehicle, if you will, in general, and I don't know, it's a bit of a mixed bag in my opinion. Uh, when you give away 20% or so of the company at the prices that they often get given away with in a SPAC, it makes it a little hard from my perspective to view it as a great investment. But not every SPAC is created equal or set up, and Robert Friedland obviously is a serial entrepreneur with just great success the whole way through. So maybe it works out. So I can't really speak to that SPAC in particular.
But maybe to jump in, like we've seen a lot of SPACs come to market. I think MP Materials, Charging Point, I think is one of them. Like more of the let's call them the supply chain or enablers of change, right? Do you see more of that happening? Like, is that an investment trend you're following?
No, I mean we definitely there's a full pipeline of venture cap firms that are sort of ready to go public. There's been plenty of venture cap investment into the space. There's been plenty of, as you point out, SPAC investment in the space. And a lot of industrial firms are investing heavily into different components of their business that admittedly are still small, like, for instance, hydrogen electrolyzers or things like that. But they're growing and they're becoming a focus. So there's definitely a huge flow of investment. I'd point to more of Europe and Asia as places where there's a lot more investment, and say Scandinavian markets are full of transition and energy related companies that are transitioning in one way, shape, or form, or enabling the transition. The United States, there's opportunity. Canada, there's opportunity. But it's still a little bit behind the curve. So I'd expect there to be a lot more over the coming years.
An interesting side comment I heard this morning that in Germany, for example, you can buy a Model 3 for 49,000 euros, drive it for 6 months because that's how long the subsidies last, and then sell it used for 48,000 euros because they sell it to Scandinavia for a high premium. So where I'm getting with this is,
that sounds like an interesting arbitrage.
It works. People do that. You drive a nice Tesla for 6 months for 1,000 euros, right? Which is like $1,200 US. It's crazy. But subsidies are one factor. And Alex actually had another question on YouTube, which I think is quite fitting, and it's a hen and the egg thing. Do you buy the EV first, or do you wait for the charging stations to be installed? And Biden, coming back to what he's been saying, he wants to install 500,000 charging stations. Like, are we putting the horse before the cart? Is the question. Oh, the cart in front of the horse. Sorry.
Yeah. I don't know. I mean, I think that's an interesting question. I don't think it's one we can resolve. Market creation is quite complicated, and what comes first, et cetera. Definitely say in California, I would say you can buy an EV. If you look at like one of these Tesla charging maps or something, or a Blink. You mentioned Blink, and there's ChargePoint. Those are both publicly traded EV charging companies. I think there's another that's sort of coming public via a SPAC. There are plenty of them in California, but you say I'm in North Carolina. I'm not sure. I'm not sure I'm ready yet to buy an EV for traveling up and down the East Coast. Maybe I haven't done the work. Maybe there are more charging stations I know of. So I think it's just going to depend on sort of where you are geographically. And I think the world is becoming a little bit balkanized, if you will, in terms of transitions to a low carbon economy. And I think everyone's going to need to sort of look at where they are and the regulations and where they are to sort of get a real understanding of how that change is occurring for them personally.
Okay. No, that makes a lot of sense. And let's jump to your top holdings and top stock picks for now. How are you playing it now? You mentioned Lithium Americas. You mentioned a couple of other companies like sort of in tombstone form on the website. One is a uranium company, for example. What are your biggest positions and what do you recommend? Or I wouldn't say recommend, but what do you hold?
Yeah. So what do we hold? And do your own research, obviously. But Lithium Americas is one of our largest holdings. we think Lithium Americas could go from having, sort of no operating mines at the moment, to being one of the sort of lithium majors over the course of the next 5 years. They have two just spectacular mines, great relationship with Ganfeng for their Kuchari mine. They've sold all the offtake to Ganfeng going forward at market prices, so that's a real positive with an offtaker. And then when the stock sort of spiked earlier this year, management, in a very forward-looking way, said, this price has gotten a little out of hand. We're going to sell stock and finance the build out of our Nevada mine, Thacker Pass. And so we think Lithium Americas has a lot of potential going forward. In terms of copper, for example, we love Ivanhoe. Speaking of Robert Friedland, and Kamoa-Kakula, which is going to come online shortly. It's had quite a move, as have all these stocks. So, tread carefully, but they will be turning on the mine in the next month or something, or 2 months. It's ahead of schedule by a couple of months, and they've just done spectacular work. And that mine is truly a unique and sort of amazing piece of geology. It seems like just the grade you've got copper grades that you just don't really see anyplace else.
It's about 8% copper or so for the first 18 years or something, extremely high. Yeah.
The waste dump pile that they've built from actually building the underground mine has a higher copper grade than most copper mines. So that's just great stuff. And then I think there's wonderfully interesting opportunities in a couple of utilities. We own AES and RWE, and I think at these prices, they're both quite interesting. They are historically sort of more coal and nuclear oriented utilities, one in Europe, one in the United States and South America, and have transitioned and started that transition to renewables. And in the process, they've gone from having sort of these somewhat volatile earning streams to having higher margin earning streams that are mostly associated with power purchasing agreements that have lengthy lives and often are subsidized in one way, shape, or form. So you've just had this expansion of margins and improvement in the quality of earnings. So they're both quite interesting. So that's, and then you sort of look at commodities overall. And so one of the other interesting places to look is companies like Equinor, which admittedly produces oil, but is also, this great offshore wind company now. And that sort of dichotomy we think of as quite interesting. We don't necessarily like some of the large integrated oil company strategies. They're a little too diverse for us. One of the things we like about Equinor's strategy is they've said, we're really good at offshore. So we're going to focus on offshore wind because that, we can leverage knowledge that we've got, versus say someone like BP, who's just sort of said, we're just going to do everything. Not as enthusiastic about that. We're still doing work on Exxon Mobil, but Exxon Mobil owns the largest patent portfolio of carbon capture technology in the world. They also are the largest operator of carbon capture technology in the world. We are not invested in them at the moment, but that sort of idea that, maybe this patent portfolio is something we can really leverage to extend our business model, and to add a real additional value added line of business, is an intriguing idea. And I think with some of the changes you see them undertaking right now, there's a possibility that becomes a very interesting sort of opportunity.
Yeah. Oh, fantastic. And Exxon Mobil, the Royal Dutch Shell, is one that used to go all out in terms of marketing for their renewable side of the business, and they don't want to be seen as an oil company anymore. That's one that comes to mind as well. But Will, to wrap this up, what is a potential major disruptor or a black swan event in that transition? Like a black swan in a positive way, though. Like what could be something that flicks the switch entirely and that changes everybody's way of thinking about it? Is there something that you foresee? Is there?
Yeah, I mean,
It's like that one domino that makes them all fall, right? Like that starts it off.
I think that carbon prices certainly start that, and we see them in Europe already, and they're starting to gain a lot more steam. The UK came out with their carbon pricing scheme earlier this week. China is coming out with sort of slow rolling it across different industries. And so I think that over the next couple of years, the majority of the global economy is going to start to be covered with a carbon price. And I don't think we're going to get it in the United States. I think that carbon price is going to change a lot of the math on a lot of these businesses, and it's really going to supercharge a lot of the transition. The United States adopting one would throw it into overdrive. But again, I don't think that a base case with the United States imposing a carbon tax is sort of appropriate. It's very hard to see how that type of thing would get through the Senate. It had to overcome a filibuster, and I just don't really see that as terribly feasible. But the rest of the world's going to do it, and everyone operates internationally these days, so it's going to have to start to be something people take into account. I also think that shifts the ESG discussion dramatically. So right now, the ESG discussion, at least in my opinion, is quite immature, and the analysis is also quite immature. You look at the way ESG portfolios are constructed, and there's a valuation process and then a ESG screening process that occurs afterwards. And that, from my perspective, just is a little confusing. If ESG stuff is risks, it's going to impact your valuation. So you've missed some connection somewhere. And the carbon price is going to put sort of the significance of those risks front and center in the valuation. So I think the carbon price is important.
Oh, that ESG discussion actually opens a whole new can of worms here, and we could go down a different rabbit hole as well, because I've seen a couple companies announce, mining exploration companies announce that they're exploring in a carbon neutral way. So I think there was an announcement this morning or just yesterday. So we got to get you back on the program, Will.
Well, I'm happy to come back on. And Ivanhoe, one of the previous companies we talked about, they're looking at electrifying their underground fleet, and a lot of mining firms are looking at dry stacking tailings and different ways of being more environmentally friendly. And there's a lot of, as I said, industries haven't been disrupted in 100 years. And you're starting to get a little disruption in interesting places, and that creates opportunity.
Fantastic. Will, thanks so much for joining us this morning, or afternoon for you, so I really appreciate that.
Happy to be here.
And Massif Capital, actually, you ran a fantastic blog there as well. As you said, you just put out a blog post this morning, or yesterday, actually. I think it was May 19th, so yesterday. So everybody else, and also follow the Twitter handle at Massif Cap as well, so good content there as well. But Will.
We put out research reports and white papers, so feel free to sign up.
Awesome. Fantastic. Well, thanks so much for joining us, and everybody else, thanks for watching. This was SF Live episode 184 already. We were joined by Will Thomson. He's the founder and managing partner of Massif Capital. We had a great discussion about renewable energy transition, how to invest and benefit, of course. Make sure to follow us on YouTube, follow us on Twitter. Don't forget to hit that like and subscribe button, and turn on that little bell notification as well. As we do all our interviews live, you do have a bit of an advantage, and you hear it first from the CEOs, from our experts, and make that to your advantage. So thanks so much, and we'll be back tomorrow with an interesting panel discussion.